IndiaLends is a consumer credit platform where we help millions of consumers with their free monthly credit reports, which allows them to get an insight into what the banks know about them. And at the back of it, they can get access to the best loans, the best credit cards from all financial institutions, including the country's biggest banks and NBFCs. Now, COVID has had a major impact on the business. That is because both the demand and the supply has been impacted. On the demand side, earlier we used to see a lot of people coming in for loans to travel, to renovate their houses, to look at, wedding expenses for themselves or for their kids, education expenses. All of those things were key areas where demand for loans used to come in. At the same time, people used to apply for credit cards when they were going out shopping or for online shopping. Now, with the lockdown coming in place, all of these things have been postponed. And hence, we see a big impact on the demand for loans coming in. And on the other side, where we have the banks and the NBFCs, although there's a lot of liquidity with the banks available, but both the banks and NBFCs are uncertain as to why would people want to borrow in these times. At the same time, they are also uncertain as to what does unemployment look like going forward, what's the impact on job losses going to be. And for that reason, they're a bit wary of lending right now. While I say that demand for credit has gone down, there are still a lot of borrowers out there who have genuine reasons to borrow right now. For example, people with small shops, primarily in the healthcare space, you're having a small pharmacy, or people who have grocery stores and essential goods are looking to expand their businesses or are looking to get credit to make sure that their supply chain is not disrupted. At the same time, there are people who are looking to refinance some of the loans. Let's say, somebody had a high interest rate loan. He wants to take this opportunity to refinance that at a low interest rate. And these are the people who are coming to us and asking for loans. So looking at this in mind, we made some key changes to our process flows. We had digital loan journeys in place earlier, which meant that you could get a loan without having to give any documents. We went a step further and launched what we called the touchless and contactless range of products, whereby there is, in addition to not having to give any documents, now there is no need to even speak to anybody, whether it be on the phone or it be to a chatbot. Everything can be done on your mobile phone, on your computer, without you having to interact with any other person. At the same time, we expanded some of these benefits to our lending customers as well, whereby some of our partners who were not able to get the right technology at the right time, or were not able to get the vendors to build products for them, we simply opened our APIs and said that why don't you come and lend at the back of our technology platform and take the benefit of the whole touchless journey that we have created. We realized that people were genuinely worried about the health of themselves and their loved ones. And we felt that this was the right time for us to also offer them some health insurance, in particular COVID insurance products, in partnership with some of the leading general insurance and health insurance companies. So in particular with the COVID situation, I think one thing which is coming out for sure is that how many people have taken the moratorium versus not. That is, I think, a clear risk indicator in terms of people's ability to pay back loans. And that is, can also be used as a substitute to figure out whether there has been some stress on people's livelihoods, whether it be, job cuts, drop in salaries, or a fear that a salary cut may be coming in the next few months. So this is, unfortunately, this will be an area where a lot of underwriting will focus for, in at least in the near term, be on top of the credit reports. For younger first-time borrowers, I think the trick over here would be to showcase where they're working, what their qualifications are, and even though they may be in a state where their incomes may be slightly reduced right now, they have the potential to come back, and they have the potential to get their livelihoods back in order. And those are the things that some of the lenders would be looking at. We believe that the new normal is going to be a lot towards social distancing, at least in the near future till the time a vaccine is out. What that means is that work from home is likely to continue. Even if it doesn't continue in the same way, there will be a lot more organizations that will be flexible with people working from home. That is definitely going to lead to a increase in demand for things like laptops, smartphones, for almost everybody in the house. At the same time, I think in the near term there is going to be a big drive towards using personal mobility as opposed to shared mobility, whether it being people moving from or from a cab to a two-wheeler, and from a two-wheeler to a three-wheeler, sorry, a four-wheeler, right? So that whole transition is going to happen, and which would mean that there would be a rise in demand for personal mobility products like cars and second-hand cars, two-wheelers, and we are preparing ourselves for this boost in demand coming in both these, the laptop and smartphone category, and from the mobility category.